Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's February 26th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Say a lot's going on with the market. What do you think? I'm looking, the Dow is up 350 points, rebounding after 2 days of a massive sell-off due to coronavirus. And again, this is going to be a special podcast. I'm not going to have a guest come on. I know you guys love when I have guests, but anyone I bring on, unless it's, the people that I'm reaching out to are officials, are leading scientists, leading infectious experts, trying to get those guys on the podcast, because anybody else right now is just going to take away from the important message. And the point of this podcast is you need to protect yourself. Okay, we're going to see bounce backs here and there. There's still tons of uncertainty. And people may think, well, it's oversold. We're fine here. We're going to rebound like we always rebound. I told you this time it's different. There's one thing that I taught you over the past, doing this podcast for 12 years. I say it over and over and over again. One of the worst things for stocks is uncertainty. And right now we have uncertainty. There's hardly any facts out there. We don't know how quick this virus is going to spread. We don't know anything. We just know that everything is shut down. Almost everything is shut down in China. School's still closed. Supposed to come on 2 weeks ago. Now it's other weeks. It pushed out to March, beginning of March, mid-March, April, some of these things. We don't know. And if you don't know, you can't invest. And that's a problem. That's why, yes, we're going to see little rebounds here and there, but they're probably going to be short-lived. Now, right now, you still have to be worried. If you look at the markets right now, we're down 5%. We're only down 5% from the all-time highs. What is it? That's nothing. Take out even before the credit crisis, or you could add the credit crisis. You could do till whatever, 2010, 2011. And we usually go through, we have recessions. We have market pullbacks of 10%, 12%. That's normal. All these markets do well, and all these companies, everything starts going up. They don't deserve to get it, and then they pull back. And now we have uncertainty in the market. We're down 5%. Everybody's panicking like, we're down. So we're barely down. We're barely down. Some stocks have gotten hit more than others, as you know, the ones that have more China exposure. But you have to be worried because the world's biggest growth engine is still shut off. And we don't know when it's going to come back on. So 4 weeks ago, I sounded the alarm, my newsletter, podcast, saying that this is not priced into the market. Companies, there's 30% of S&P 500 companies in their last quarter, not the ones that are warning that I told you. We're going to get hundreds of warnings, hundreds. So that 2-3 weeks ago, we're getting 100. We're just starting. There are like 20 companies that warned and said there's going to be a major impact. But Apple removed this guidance. And they even said on their call that, yes, we could see disruption. These companies were telling you that they're going to see disruptions. China was telling you we're shutting things down. Nobody cared. Nobody cared. It was amazing to me. This isn't like, Tesla. Will they get out their shipments? Will they won't? Do they have enough money? Are they cutting costs? And, you go through a quarter. No. That's debatable. That's debatable. This wasn't debatable. Like the companies, this is a fact. It was saying you have to, we're worried. We don't know. It's the worst thing you could say as a company when you can't forecast. You don't know. There's a reason why when companies say, hey, we're removing our forecast for next quarter, next year, they crash. They're going to go down tremendously if they say that. Because now there's no certainty there. You shouldn't be surprised the market's coming down, and shouldn't be surprised it's going to come down a lot more. Now, you guys know I cover my losers more than my winners, and I've been wrong a couple of times. People send me emails, Frank, thank you so much, thank you so much. I'll go over this in a second, but I haven't been right on everything. I thought airlines would be a great buy because they can measure, okay, we're closing down flights to and from China. Okay, you could model that. This is how much we're going to lose. Fuel costs are down 25%. I'm like, wow, these you're going to see airlines sell off. And when they sell off, they're going to be a good buying opportunity because it's a wash. Their earnings aren't going to get hurt and they're still cheap. And you know what? Look what happened. The virus is spreading to over 35 countries now. And it's not just like one case here, two case here. In South Korea, over 1,000. Iran, you're seeing, this spread, which means what? Now you're talking about, I discussed it with my wife. And we usually go away and I have a timeshare, that where we usually go to Dominican Republic and, we can go to different places. And we go around March, every year. And I talked to she said, I don't think it's a good idea to hop on a flight. And you know what? I agreed. And she hates me for this. I'm the least paranoid person out there. I'm jumping off buildings and stuff and skydiving and having fun, never really worry about anything. But that's the sentiment right now. So airlines, people aren't flying. Nobody's taking a cruise, right? If you take a cruise, one of my friends said they're taking a cruise. Yeah, we're taking a cruise. We got it for $3,000. I told them to cancel it. They'll come back with you and tell you it's $1,000. I said, you're going to be only 2 people on a cruise. Like, we're going to Alaska. Is the virus okay over there? Yes, the virus travels the most during cold. It's cold. That's seasonal. It's the reason why when the flu happens. The flu's not during the summertime. The heat usually kills these things. But just one person needs to get the virus on the ship, and you're out to sea for 3 weeks. Nobody's going to say you could dock here, you could dock there. No way. They're going to say you should have known better after you saw what happened with past cruises. But the travel industry, nobody's traveling. There's fear, a lot of fear out there. So for me, I came to the conclusion, and I'm saying, like, I cover my losers as much as my winners. So, I'm not saying, patting myself on. No, it's not about that. I wish I was wrong on this because people are going to die. There's more and more people that are going to die. I don't want to be right on this. I don't want to brag about this. I'm hoping this gets contained. If it does, stock's going to go a lot higher. We're all going to make money. That's great. I mean, how many of you go short? Dangerous going short. Just ask some of the people, the smartest people in the world who shorted Tesla at 100, 200, 300, 400, 500, 600, and 700. It's hard to short, and you can get wrecked. Be living on a park bench if you're wrong with something like that. But I came to this conclusion after doing tons of research. And this is what I do with every single trend. You hear me on this podcast, go all over the world. I mean, analyze the reports. Run thousands of miles sometimes to get the real story. You think I want to go to Vancouver to speak at mining conferences and things like that? I mean, I'm in Florida. It doesn't get further than that, staying inside the same country. Especially even from Jacksonville, which I have to take at least 2 flights, sometimes 3. Not fun, but it's worth it because that's the hub for the mining industry. So you get the best ideas. But that type of dedication helps me find the real story behind trends, a story that you're not hearing out there. And you know what? It lets me find these trends with zero bias. And you know what that means? It means my opinions are unpopular a lot. I've gotten hate mails on topics like fracking saying it doesn't cause water contamination because I went there and I saw it. It doesn't. Anyone that says it does is just has an agenda. They don't want to read. They don't want to look at the facts. They don't want to study. I mean, I went there thinking that there was going to be dead animals every place based on everything that I read and that I heard. When I went to Brazil during the Olympics, Zika virus is going to kill it. Then they said there's people's body parts in the water. I went there. I'm telling you, I just got my back surgery. I was scared shit to go there. It was one of the nicest places I've ever been to in my life. It was beautiful there. The people were nice. I was at a bar watching that game against Germany when Germany won 100-2, whatever the score of that game was. I mean, he scored 3 goals basically in the first 5 minutes. What was it? 9 goals, 8 goals he scored, whatever it was. Destroyed them. You know what? They weren't throwing bottles or going crazy. They were all cool. They realized they lost. I mean, it was just, you got to be careful what you read out there. But doing the homework, boots on the ground, again, it lets me look at a subject from scratch and have zero bias. Hey, look at the tariffs. All the bullshit about the tariffs, guys. I mean, China's killing us. They're crazy. The U.S. is going to crash with a trade war. I mean, if you go on Google and look, just trade wars, type in trade wars, you'll get like 300 million stories over the past 2 years. And I was like, just ignore it. Ignore it. It's all bullshit. It's all smoke and mirrors. China has to work with the U.S. They have no choice. That was before the Hong Kong nonsense. They have no choice. I mean, who would you want to be? The person who makes everything or have the money to buy everything? Because if you make everything, you're selling it to, and your biggest consumer in the world, right? The biggest consumer in the world, and they say, you know, we're not buying your stuff anymore. Who are you going to sell it to? We could buy it from anywhere. We're going to pay a little bit more money, but that puts us in the driver's seat. That's common sense. Nobody wants to look common sense. China owns treasuries. They're going to sell the treasuries unless they want to collapse their entire economy. That ain't happening anytime soon. Give me a break. I told you to ignore all the stories, buy stocks on pullbacks. It's all bullshit. Trump. Oh my God. I can't tell you how many emails and negative emails I get on Trump saying, you know, pedal to the metal. It's going to be good for the economy. I realized that pretty much 6 months into the presidency. The tax reforms, everything. And people just listen. You hate Trump, you hate Trump. My job is to tell you how to make money on stocks. That's what I do. And his policies are very, very favorable for businesses. They're paying less taxes. They're hiring more. They're going to generate more profits. Earnings are surging. That's why unemployment rate is at a record low. A company's hiring. I'm not saying Trump is the best thing in the world. I'm saying Trump is very, very good for the stock market. Doesn't matter the hate emails I get. And you know what? I don't give a shit about him. I don't. I don't give a shit about the hate mail. The only thing I care about is providing you with information so you can make the best financial decisions for yourself and for your family. That's my job. My dad taught me 25 years ago. It's a foundation of Curzio research today. At the end of the day, my research, it's not based on stubbornness, not based on emotions, based on crunching tons of numbers, doing a ton of work. And then you have to throw in good old-fashioned common sense. And when I did that, that's when you come to the conclusion that the coronavirus, and 4 weeks ago I said it, going to cause the biggest global disruption since the credit crisis. And investors that don't position themselves accordingly are going to get crushed this year. Now, this has been going on for a month. We've seen the market come down. People are nervous. And I'm going to make you more nervous, not on purpose. Because I'm fortunate to have access to a lot of stuff. And there's stories out there that few people are talking about. And they've come out just over the past week. Okay, so this isn't, talk about past podcasts or about, this is right now. This is right now. That's why it's important. So I don't have a guest today. Okay. And the source I have right now, you're not going to get a better perspective or have someone probably more on the inside right now, especially when it comes to your financial investments. And I'm not saying that to brag. Again, I have tons of sources emailing me about their supply chain disruptions now. They're reading almost every single sell side report, which is hundreds over the past month, and watching what these guys are thinking and what they're saying, which led me to my thesis saying, wow, these guys just don't get it. I have people emailing me from China, real boots on the ground. So I'm going to share with you. Sure, these stories are going to be new to a lot of you because I'm not seeing these things reported in a lot of places. I'm not talking about pulling stories off of Reddit, social media, or BS news sources. These are credible. Leading infectious doctors, scientists that run major institutions. So here's some of the things that I'm hearing. One of the most alarming stories I heard, and Reuters reported this, a 70-year-old man living in China, Hubei province, which is, almost ground zero for the coronavirus. He went 27 days without showing symptoms. Okay, if you're not familiar with coronavirus, there's a 2-week incubation period. They say symptoms show up, you can get them. They show up anywhere from 2 days to 14 days. After that, you're good. You're fine. Go ahead. Go into the public. We release you like a wild animal. Go, you're fine. Go play with everybody. This guy got it 27 days ago. It didn't show any symptoms until 27 days. So think about that, because the Chinese government and a lot of other countries have a 14-day incubation period. What does that mean? It means that these people could still transmit the virus and you can still get infected. And they're throwing these people back out into the population. And, which means a lot more people are going to get it. A lot more people. And that's pretty crazy when you think about that. That's one of the biggest stories out there. You're trying to contain it, saying, "Oh, it's slowing in China." Don't believe the numbers in China; they're all bullshit. This is the third time I think a couple days ago that they changed their method of counting of how you're infected. Either you're fucking infected or you're not. It's pretty simple. It's pretty simple. And even if you're borderline, you should be thrown into the affected pile just to make sure. No, no, no. We're going to change our method again, our methodology. We're going to just keep changing it and changing it and changing it. Okay, that makes sense. That does a lot. But just based on this data, you could see why it's starting to spread so many countries. But we're closing in on what? The third month of the outbreak? We have 80,000 infected, 2,700 people have died. Numbers keep going higher and higher. And despite these numbers being high, the virus is nowhere near being contained. And China refused to allow leading scientists, infection experts into the country. Not even the members of the CDC. Like, why do you think that? Why? Why wouldn't you want people in? And I had some great sources. One of them emailed me. Said, don't use my name. He's a great, great source, a fantastic source. He's not a crazy guy. And he brought up something to me. I'll tell you the story. And just think about it. It made me think, okay? If you're looking at China, what is this virus? Who is it target when it comes to fatalities? Old people. What's the worst thing for an economy? Well, when you have a lot of old people and you don't have a lot of young people being born, which they have the two-child policy. So you can't really do anything about it, but maybe this is a way to say, hey, let it spread. And, you know, you think that's crazy. I thought it was crazy when I first read it. I thought it was crazy. But remember, you got to take yourself out of America where everything is free. We're talking about a dictatorship, communism, where the government wants to rule everybody and rule the world. How do you do that? Well, it's nice if you can get rid of a large portion of your older population. Again, this is somebody else's opinion. And to be honest with you, I don't believe it. But I like hearing the other side. But the last line was like, look, the guy's not a conspiracy theorist. Again, he's a great contact. Not some crazy guys give me amazing information on China and the markets over the years. But it made me think. And he even said at the end, he's like, listen, just this is different. This isn't America. This is different. This is communism, basically. Dictatorship. I mean, so the government wants full control of everything. Otherwise, look. And just for the short fact that they're not letting leading scientists, leading doctors in there to help them out, to save lives. Why? I don't know. Do I believe that? Again, I don't believe. I'm just throwing it out there. As crazy as it sounds, and I think it's crazy as it sounds, because I can never, ever, ever picture anyone doing that. And I hope there's zero truth to that. But it did make me think. Because you know what? We all know China's government is full of shit. The past few days, China has released statements, downplaying the spread of the virus. And it's starting to slow. And I don't know. I mean, if the current numbers are to be believed, the infection rate amounts to just 0.005% of China's entire population. Think about that for a minute. Okay? Think about that. Of the entire population. What is it, like 15, 20% get the flu here? Okay? This is 0.005% of China's entire population. As for the fatality rate, I mean, more people in China die, I mentioned this last week, from being struck by lightning every year, right? Now, if just 0.005% of the population is affected, don't you think it's a little drastic with China's measures here? Let's close down every plant, every factory, all stores throughout the country, just about, and place over 500 million people on lockdown. Everyone's reporting 50 million. It's 500 million people on lockdown. Not 50 million, it's 500 million. This isn't SARS. It's spread to every province, all 31 of them. But why would China do that if it's not a big deal? Why is school still closed if it's not a big deal? Why won't you let anyone in the country if it's not a big deal? It's because the outbreak is much worse than what the Chinese government is telling us. I provide examples showing how Lancet, prestigious magazine, medical journal, saying that the number of cases are probably 10 times higher. I mentioned Tencent accidentally put something on their website showing, I think there was 27,000 at the time, 154,000 confirmed cases. They immediately took it off. And Tencent's not just some news source. It's not like a CNN or a Fox. No, 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 no. They're a lot bigger than that. Close to a $500 billion market cap. That would place them in the top 10 of the S&P 500. Owns WeChat, over 1 billion users. Largest gaming platform. Controls the whole music services industry, basically. I mean, they have access to more consumers than anyone in the world. This isn't a BS company reporting that. Again, I'm not giving you BS numbers here, or from BS sources. One of the most recent stories, another one that you're not hearing. Dr. Gabriel Young, one of the world's leading experts on studying the patterns of infectious diseases, right? He suggested the coronavirus could infect 60% of the world's population if left unchecked. Dr. Young, he received his master's from Harvard. He's a SARS expert. He managed Hong Kong's response to the swine flu outbreak in 2009. You know what? I think he's wrong. But what happens if it's 10% of the population? That's not even close to being factored into markets. Again, he's saying 60%. What about if it's 10%? What if it's 5% of the world's population? Again, we're talking about a small, tiny, itsy-bitsy percentage of people uninfected right now. Again, 4 weeks ago, I told you this is something I worried about. Warned that the markets, they're not factoring in this risk. And coming to that conclusion after doing tons of research. But I have to tell you, from this podcast today, from back then, my thesis did not include the spreading of this virus into other countries. It did not include that. I mean, just over the past few days, hundreds of more cases continue to pop up in other countries. South Korea seeing the biggest surge in new cases. According to the latest report, more than 1,100 citizens have been infected. 1,100. Put that in perspective, it was 51 7 days ago. That's insane. And it's starting to close public facilities, schools. You have Samsung, big plant in South Korea, closing it after one of their employees tested positive for the coronavirus. Japan's health minister acknowledged, this is crazy, the government is unable to track the root of infections in the country, which is now up to 160, 170. We lost track of them. We have no idea. We don't know where these people are. We don't know. We'll figure it out. I mean, that's a big deal considering the Olympics are in Japan this year, and it's like 140 days until the opening ceremony. It's kind of a big deal that you lost track of those people, don't you think? I mean, we were able to scare athletes from not going to Brazil because of the Zika virus. What do you think athletes are going to do here? Any athlete that has a kid, any athlete that lives at home with their grandmother, their grandfather, they're not going. They can't contract this. Especially some of our athletes who are pros in other sports who need to come back and play to earn their money. But is it worth the risk? Because the media is going to hype this thing up 10 times more than even it is. Even if it dies down, they just say, oh, well, we have one person in Japan that had it. That's all you need to hear. And the Olympics are going to be totally, totally different this year. But I have to tell you, it's not just limited to Asia. You have more than 150 new cases reported over the past weekend in northern Italy, which includes Milan. 6 elderly people died. This is as of February 24th. And what did the Italians do? They quarantined 50,000 people. Sure, that number's going to skyrocket. But there's a radio interview where Lombardy's regional governor, and that's kind of where the most affected people are, he actually said, to be honest, nobody thought the spread would be so aggressive. I know. I got to tell you, look at the U.S. Why is the CDC coming on TV yesterday and saying, and kind of warning us? Almost like, we don't think it's going to come, but it could come. I mean, that's the CDC telling us that it's in the U.S. I mean, there's 53 cases in the U.S., but you have to see this. There's no measure. There's no measures taking place. I mean, people coughing or whatever. They have no idea. You think it's not going to spread to the U.S.? It's in Iran. You think it's going to spread to? Of course it's going to spread in the U.S. I mean, it's not going to be crazy. We have the measures that I think we're going to see much fewer fatalities. Again, think of it as the flu. But to say that it's not going to come to America, where it's in Italy, it's in Iran, Germany, France, UK. You saw a lot of these markets sell off Monday and Tuesday. You look at Iran, health ministry said total number of infections grew to 61 with 12 fatalities so far. 61 with 12 fatalities, guys. That is huge. So, a lot of people think that they're lying about their numbers. But if they're not, that's a 20% fatality rate. What's going on there? I mean, it's now up to 3.5% in mainland China, which people aren't talking about. That's a fatality rate. It was 2.4, 2.7, 2.9. That's the past 3 weeks. Now it's 3.5%. People say, well, that's because they're slowing down with the cases of more infected, and then the people are infected. We don't know what the numbers are in China. You can't tell me they shut down the whole economy, 500 million people, and shut everything down. With just 80,000 people infected? No way. And what happened when Iran said, look, we have a problem here? Turkey, Iraq, Pakistan, Afghanistan, Armenia, Georgia, all closed their borders to Iran. People are closing their borders. There's no travel. There's nothing going on. But we're going to be fine. Stocks should be trading at all-time highs. I'll cover that in a minute. Meanwhile, Israeli officials are scrambling because they have a group of 9 South Korea tourists. Every one of them tested positive for the coronavirus. It's returning home. So they're like, whoa, we got a problem here. Just insane. There's no measures being taken in a lot of these countries. They thought it was a China problem. And look, I said this before. Wall Street doesn't get it. I've been looking at their sell-side reports. They're finally starting to get it a little bit more. Most economists don't get it. I'm not saying that I'm some kind of brilliant genius or whatever, and I get nobody else. But the stuff that I'm reading, you want proof economists? Hey, look at Kelly Evans. And Kelly Evans, I love her. She receives a lot of criticism. People are like, Kelly Evans, why she's on TV or whatever. I think she's one of the best hosts because she speaks less than the people she's interviewing, which a lot of hosts don't do that. But she is an amazing economist. Amazing economist. I mean, she was on TV so much talking about the economy. That's how she got this job, because they liked her so much. So I know we're used to listening to, Squawk Box on CNBC, and then, whatever, Street Signs or Kramer. It's entertaining, and then Fast Money at 12, whatever. You have entertaining shows, but at 3, 4 o'clock slots kind of, ratings wise, tail off. Let me tell you, if you missed that interview with Larry Kudlow came on. Why? Because he knows Kelly Evans, because they're both economists. And she was grilling him. What if it comes to America? Well, the numbers, based on the data that I'm seeing, he couldn't answer any of the questions. It doesn't look that. And she's like, yeah, but what about this? What about that? This is going to impact the economy. Now, she had all the numbers, all the facts. Larry Kudlow had no idea. He wasn't prepared for the interview at all. Listen, I hear what you're saying, but, from the data that I'm seeing, and that's the biggest thing, people. From the data I'm seeing, and this is why Wall Street doesn't get it, most economists don't get it. They look at numbers all day. They use history as a guide, or historical analysts, where they compare a trend based on what happened in the past or something similar. And then they use discounted cash flow models to try to predict the future, right? That's Wall Street. Even economists, they look at data. Look at Ben Bernanke. Everything I learned was from the Depression in the 30s, and this is why I was able to figure out what to do, which is fine. That's great. The only problem is, with this particular subject, there's nothing in history to compare this to. It's the first time we've seen something like this in the history of mankind. You can say, Frank, wait a minute. There's other huge outbreaks in the 1800s and 1900s. Yes, you're right. But never in history have 500 million people been on lockdown in fears of contracting a virus. Everything gets shut down. So what are all these people doing? They're comparing it to SARS, which is so fucking dangerous. Sorry to curse. It's so dangerous. Because when SARS happened, it was such a quick rebound after the initial scare. If you look at SARS, it took place over 9 months from 2000 to 2003. Only 8,000 people were infected. If you believe the numbers, it's 80,000 now. And that was over, again, 9 months. This is just 3 months. Only 8 Chinese provinces were impacted during the SARS outbreak. Now it's all 31 of them. And 500 million people are on lockdown. You're comparing this to SARS? Before SARS hit in 2002, Chinese residents took 16 million trips outside the country. Now they're taking over 160 million trips. It's a tenfold increase. 2003, China was the sixth largest economy in the world, accounted for 4% of the global GDP. Today, it accounts for 17% of global GDP, and you're comparing it to SARS. Oh, it's going to be a V recovery, just like SARS, just like the swine flu. Let me put this in perspective for you, because Goldman did a good job. Goldman's putting out some good research now. They didn't take it serious. They said, it's just temporary. We'll be fine. Now everybody knows it's not temporary. So Goldman, which still believes it's probably going to be a short-term problem. It was basically a month or two problem. Now they're saying it's like a 4-month problem, which I think is, it's going to be at least, it's going to have, through the year, we're going to have problems. They do a good job putting it in perspective. So they actually say, I'm going to quote here, the sheer breadth and depth of the disruption is simply unprecedented. With, for example, the number of missing hours owing to the virus, which is equivalent to the entire U.S. workforce taking an unplanned break for 2 months. The entire workforce. This statement came out last week. Those 2 months already took place. What happens if it happens for another month, 3 weeks, 4 weeks? Now you're taking 4 months out of the market or unplanned break. 6 months, 9 months. Now you can see the impact of it. And the reason why oil's crashing. The reason why travel companies are crashing. Nobody. I mean, the numbers are absolutely insane. Absolutely insane when you look at it. I mean, you're looking at the virus nowhere near being contained. I think we'd all agree with that. So we're not going to see fuller production anytime soon. And if you want to know if that's a big deal or, hey, the U.S. won't get impacted at all, if you look at the numbers, it's China accounts for 17% of the imports coming into the U.S. If we put that in GDP terms, it's 1.7%. You want me to put that in perspective for you? Economists believe the U.S. economy is going to grow 2% this year. Yet you're taking 1.7% of that is from China, and it's offline. But everything's going to be fine. Everything's going to be fine. I mentioned Ed Hyman, chairman, head of economic research team at Evercore a couple weeks ago. They're ranked number 1 by institutional investor pretty much forever, 39 out of the past 45 years. He says China's going to see zero economic growth in the first quarter. Zero. Goldman Sachs said 5.5%, 4.5%, 3%. I think they're at 2% now. I mean, those numbers are pretty crazy considering China's economy grew 6.1% in 2019. That seems like a fast growth rate. But again, they've been growing at 10, 12, 10, 8. That's their slowest pace in 30 years, 6.1%. I mean, throw it in Hong Kong, throw it in a slowdown economy. It was bad there before this. And people telling you to buy China, everything's going to be okay. They're crazy. They're absolutely out of their mind. Yes, they're going to throw everything at this. I don't know what low interest rates are going to do. And we talk about the Fed lowering interest rate. Is that a good idea? I don't know, because this is not a problem with numbers. I mean, you're looking at sentiment. These are people scared to spend money. There's a reason why, if you look back at the credit crisis, in the heart of it, in 2009, they were giving checks for you to buy cars and buy houses. They were giving you thousands of dollars saying please spend, everything's going to be okay. You know what? They were right. If you bought a house, car, any asset, you did very, very well. But they were paying you. They were trying to entice you to spend money. How are you going to tell people to spend money when they're scared shit to leave their houses? You think they care? This isn't a problem where people are going to be okay. I mean, think September 11th, again, that's drastic, but I do think it's a little comparable to the emotional state of it. I mean, I remember going out of my house a few days later, I'm looking up in the sky at planes and worrying that they may crash. I mean, just crazy stuff that it sounds crazy now, but the emotional toll, again, I'm in New York. I saw this. I have friends that died from this. I mean, the emotional toll it took for many, many, many months. People aren't looking to spend money. And to think this is going to be a V-shaped, which means it's going to come down and then go right back up. It's crazy. It's going to be U-shaped, and that part of the U could be much. I'm just arguing it's going to be much longer than expected. Again, we have uncertainty, and everyone's just predicting. Oh, it's probably like a 1/4 problem. We're going to be fine. Now, the biggest takeaway you need to understand. Okay, biggest takeaway from everything I'm saying here. You have to understand just one thing I'm going to throw at you, and you're going to understand why the market's coming down and why it still has more risk. It's China accounted for 39.2% of the global economic growth in 2019. That's according to the IMF. I mentioned that stat. Just that stat alone should be enough for you to reduce your exposure to stocks, especially ones that have exposure to China. Because you're looking at 40% of the economy growth, right? That growth engine has been turned off. That's an incredible number. After all, we're in a full-blown growth market where U.S. companies are trading near historic highs. Now, why is that significant? As of last week, the S&P 500 was trading at 19.5 times forward earnings. That's the most expensive valuation since the credit crisis. More than 25% higher than the 10-year average of 15 times. The premium was warranted. The market conditions have been better. Interest rates historically low. Earnings projected to go double digits this year. We're in an election year where stocks usually outperform historically. Companies are paying less taxes. Favorable trade deals now. A lot of positives. But the coronavirus throws a wrench in the entire system. And when you have the world's biggest growth engine completely shut off, what do you think is going to happen? It's not likely going to be fully operational for months. I mean, the significance of that risk cannot be understated. Now, I'm going to throw some more stuff at you that you're probably not hearing. If you get a chance, follow me at Frank Curzio on Twitter. I'm posting a lot of this on Twitter. I'm reporting it to my subscribers. You're not a subscriber. The Baltic Dry Index, did you see it? It's a leading economic indicator that tracks shipping rates for vessels that transport commodities basically all over the world. It's down 70% since the WHO officially declared the coronavirus a global health emergency. 70%. The World Container Index. I've mentioned this before. I think this might have been on Friday's podcast, frankly speaking, which is just for paid subscribers. It's a composite of container freight rates. So it basically, it tracks the price of cargo on 8 of the biggest major routes from US, Europe, and Asia. It plunged an incredible 16% over the past 2 months. And so that's unprecedented. It's huge. China passenger car sales were down 92% in the first half of February. Okay, let's put that in perspective. I love the economy. I've been studying the economy. I love economic indicators. It's something that I take pride in. For me, I love it because the economy is about all of us. It's what we spend, what we buy, our houses, our cars. For me, I wish I was an economics teacher. I'd make it so interesting and so much fun to talk about bell curves and buy here, sell here, buy demand and all that bullshit. I'm just fascinated by economies, okay? And studying them, writing about them, I have to tell you, in my 25-plus year career, I've never seen a major economic index fall by 92% year over year. Never, ever. 92%. They're all shut down. They're all shut down. And not only that, you're just looking at passenger car sales in China. China makes the most parts. So now you have South Korea, which is shut down with Hyundai, shut down their 2 plants, which is responsible for, I think it's like 35 to 40% of their world global production. Shut down. No one's getting their parts for cars. How do you make them? Now, with coronavirus spreading across the world, countries are shutting their borders everywhere. I mean, again, I didn't factor that in. So you're looking at China, every industry with exposure to China at risk, sell China. China's not bouncing back anytime soon. China's dead. I hate to say that. I hope I'm wrong on that, but it's just, again, even with Hong Kong, they're going to throw so much at this problem, and you're going to see bounces here and there, and forgive all loans, forgive all debt, but it's not going to be enough. It's not going to be enough. You get insurance companies taking a hit here. Maybe they have insurance to cover the risk of supply disruption, but I have to tell you, they shouldn't really be taking a hit, insurance companies, because they dealt with the SARS epidemic. And you know what insurance companies do, right? With that and flood insurance, and they lower their risk as much as they can, and then they charge those wonderful premiums. And a lot of them don't cover epidemics, even though a lot of them are getting nailed right now because they said, whoa, we're not covering this. No, it doesn't mean no one's going to notice if we don't put this in a contract. No one's going to notice, right? None of this never happens here. This never happens in other. So insurance companies are getting hit, but they really shouldn't be. And that's one of the things here, guys, because what I want you to do if you're on the sidelines is you want to look at opportunities. You're going to see tons because there's names that are getting hit that have no exposure to China because people are just nervous and they're going to take everything out of the market, which means good stocks and bad stocks. That's what you want to do right now. We want to always stay ahead. How do you stay ahead? I'm not going to talk about, I'm giving you all updated facts here. But for me, I'm looking for new ideas. I still think a lot of the market can be shorted. I was telling you to short Disney at 146. My thesis was based on their whole entire strategy is on streaming, and there's not a company in the world that makes money off of streaming. I don't know if someone's got to tell Disney that. Oh, we have 28 million subscribers in a year. That's great. Yeah, a lot of them are free, and you basically say, well, we're going to have a little bit of content here and there. Well, you have Netflix paying $15 billion for content a year, and you're like, oh, we'll spend like $1 billion. Okay, you're going to be able to keep those subscribers. Not to mention they're paying $5 and you have no pricing power, right? Can't raise money with streaming. There's just too many services. Now, new CEO, and now Disney parks being closed. Now, are people really going to go to Disney World right now? Because I can guarantee you're going to see people with masks on, and it's going to scare the shit out of you because if you have really young kids, they're at risk. You think traffic's going to be up? People going to go to Disney? Again, I'm one of the least paranoid people. I may go to Disney because a lot of foreigners aren't going to be there. And if I had to guess, it's about 60% when I go. I'm in Florida. It's about 2.5 hour drive to Orlando for me. Might be a good time to go. I bet you the parks are not crowded at all because there's so much restrictions on flying. I mean, Tesla's growth model is based on China. Open up their new plant. It's closed. It's all right. Keep going higher. Automakers, of course, you know about. Clothing companies manufacture most of their products in China. There are tons of delays. The London fashion show, which is huge. But a lot of people didn't show up. A lot of people canceled. They just didn't have the supplies from China. Credit card processing companies, you see MasterCard warn. You see a lot more warnings. Just simple, common sense. Forget the numbers. Fewer people are shopping. Again, MasterCard's a global company. And more importantly, every company that's dependent on China for its growth will be at risk. Okay, you look at names like McDonald's, Broadcom, Nike, Starbucks, Intel, Procter & Gamble, Caterpillar, Tesla, Apple. And we only had Apple, United Airlines, Procter & Gamble, and MasterCard. They already lowered their earnings estimates in just the past week. Again, I expect hundreds of companies to follow. We had a couple more today that I heard. They're all going to lower 2020 estimates. And this isn't money that you're going to get back. This isn't like, oh, well, we didn't, drink Starbucks or we didn't eat McDonald's for 4 weeks. So we're going to go and buy 4 weeks supply to make up the difference. Common sense, guys. That money's gone. That revenue's lost. Now, it's important because one of the biggest things here is how to position your portfolio. And how do you do that? And one of the most obvious ways is to protect yourself from companies that have the largest sales exposure to China. You can find this everywhere. But you know what? I screened for this. If you remember Curzio Venture Opportunities, you're going to get one of the best newsletters you ever got. It's going to be 20 pages, all updated statistics. It's coming out today after the bell. Going to give you 2 amazing ideas that I think are going to surge, but it gives you the whole game plan. But you'll see that list. So I screened for the largest 3,000 US-based companies, and it's based on market cap, and showed 132 of them have more than 15% revenue exposure to China. I listed the top 30, which is more than 30%. A lot of crazy names on this. A lot of good Chevron's on this list. Goodyear Tire and Rubber, Marvel, Broadcom, GoDaddy, Tapestry, Deckers Outdoors, Danaher, Texas Instruments. A lot of names that you probably have in your portfolio, either directly or indirectly through your 401k. DuPont, and watch out for chemical companies, huge exposure. Ingersoll Rand, Applied Materials. If you own any of those names, probably a good idea to lower your exposure. You could probably do it. You're going to hear about this after the bell, but it looks like, well, the market is coming down. Again, I'm doing this at 11 o'clock to 12 o'clock, and the market was up, I think, 450 points. And now it's up 122 points. Again, this podcast is going on right today, just earlier. You're going to get it a little bit later. Definitely lower your exposure to semiconductors. And I can tell you, a lot of these names, they're not really going to show up on revenue screens. I just mentioned some, but roughly 75% of the industry manufactures their parts in China, and it's closed. Semiconductors make parts for everything that's electronic. Anything. Think Internet of Things, think connectivity, everything in your house that's plugged in, everything. They make charts for everything. It's shut down. But we're going to be okay. You look at Skyworks, I mentioned earlier, Qualcomm, Xilinx, Lam Research, Micron. I can't believe Micron got upgraded like a week ago, whoever did that. Oh, it's good. The risk rate. Now's the time to buy. It was up 40% going in. Now's the time we're going to see this stock take off. Micron has some of the biggest exposure, revenue-wise and supply chain-wise, in China. It's insane. I saw an analyst upgrade Wynn 2 weeks ago. You're insane. Who's going to go to a casino? Who's going to go to a casino? Wynn's profits, most of them are generated from Macau. Who's going to go to a casino? You out of your mind? Already closed for 2-3 weeks. They're trying to open them. I mean, you're going to have those gamblers who are definitely going to go. They need to get that fix. That's fine. But man, I don't know. But if you're looking at the whole information technology sector, it's the biggest expense, semis, included semis. They're the largest sector exposure, along with healthcare, materials, communication services, consumer discretionary, industrials. Those are the sectors that have the largest exposure to China. So they carry a lot of risk if it continues to spread. The sectors with the least amount of exposure, utilities, even energy. Even though energy companies, again, prices are coming down, so you see them get nailed. I think they're coming to a price where it's almost a lot of these companies, especially on the fracking side, can produce at $35 a barrel. They're still making money, and they're down 60, 70, 80%. This is an industry that I'm looking at. Again, you want to look ahead and try to buy some of the names that are getting killed that maybe don't deserve it. Because you're going to find energy companies that have most of their production in the Permian. You don't have to worry about shipping it to China, which is completely turned off. Real estate, financials, consumer staples, safe areas, and consumer staples that don't have a lot of exposure to China. But these are places that could act as a safe haven, and they pay high yields. But companies with revenue exposure, which everyone's talking about, revenue exposure, they're not the only ones at risk. You have to look at the supply chain exposure. And that's what's really scary. I mentioned it earlier, where China's supply chain accounts for roughly 1.7% of U.S. gross domestic product. 1.7%. Yet we have economists forecasting for the U.S. to grow 2% this year. Now, not all 1.7% is going to be impacted, but I would say probably 30% of that, 40% of that. And I haven't really seen too many people lower their GDP estimates for the U.S. this year. Amazing. Another area of risk that doesn't come up on most screens is growth stocks. I mean, I've studied growth stocks for the past 20 years. And it took me a while. This is why I thank Jim Cramer for this, because I had a value background. But these companies, and people say, how can they be trading at these multiples? They trade those multiples because they're expected to grow earnings much, much faster than the overall market. And they've been doing that. And that's why the Amazons, the Facebooks, they continue to go higher and higher and higher. People just want to look at a PE ratio. No, you have to look at the price to earnings growth. That's important. You have to look to see how fast these guys are growing. What markets are they in? Are they in markets that are huge growth markets that are basically still have plenty of room to go? Cloud, data analytics, social media, online advertising. These are secular growth markets. However, a lot of these companies rely on China as their growth component. So even though it might account for like 10, 12% of sales, it's not going to show up, on the ones that have 30, 40, 50% of their sales to China. But if you take away that growth component, these things shouldn't be trading at 25, 30 times earnings. They should be trading at a market multiple probably around 17 times. It's a big difference. Especially, you're looking at China as a growth component where it's been shut down for 2 months and no timetable on when business is going to go back to full production. I mentioned earlier the McDonald's, Broadcoms, Nikes, Starbucks, Caterpillar, Tesla, Apple's. If you're looking at retail names, Adidas, Skechers, Tapestry, Michael Kors, Under Armour, VF Corp. Names you have to worry about that depend on China for that growth component. When I look at small caps, I think this is going to be one of the biggest opportunities. Small caps, most of them generate revenue inside the US, not these huge conglomerates. However, with the market pulling off, it's basically risk off. And you're seeing some small caps, even in my CVO portfolio, come down and for really no reason at all. I mean, even they reported great earnings. They're not talking about China. They don't have their supply chains in China, but that's what you're going to see. That's the opportunity. Stay ahead of this, guys. Try to stay ahead of it. That's how you make money. By staying ahead, staying ahead. Don't be talking about the past. Oh my God, the coronavirus. It's when these stocks come down, which ones am I going to buy? What stocks do I want to buy that are going to, if they fall another 15, 20% from here that don't have exposure to China? That's how you have to look at this market. That's how you make money. One sector that I'm very, very bullish on is gold. Seems like an obvious choice. It's not just because it's a safe haven. If you're looking at China trying to lower their exposure a little bit to treasuries, they're seeing lots of inflation. They're buying gold. And gold is very, 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 very underowned by institutions. Very. When I see gold prices going past 2,000, and you know what's going to take off? The most risky stocks, which are junior miners. Now's the time to really start buying them. We have a couple in the CVO portfolio. Participated in a rally in 2016. We stopped out a little bit because it's been one of the biggest bear markets from 2011 to 2018 and 19. Now you have a bid under these companies. And how do you approach it? Because we recommended Newmont Mining and Curzio Research Advisor. We're up probably 80% on that stock. That was a great company. You know why? Because their all-in costs to produce gold are like $850, $9. So at $1,200, they're printing money. $1,300, they're printing money. And they're also paying a dividend. Going forward, it's not the royalty companies and it's not the producers. They made their money, right? Those stocks have already taken off. It's the more risky companies that have these crazy projects that are only economical at like 1,200, 1,150, 1,200, 1,300. Because now we're looking at gold at 1,650 with the chance with a lot of tailwinds behind it to go to 2,000. If that happens, think about a company, a tiny company who's small, doesn't make money, looks like they're going to go out of business, and all of a sudden, they start generating profits and start generating massive profits. So yes, we're going to see the producers, the majors, make more money because gold prices are going higher, but those stocks are reflecting that. A lot of juniors have not participated in the rally. You could say, well, some of them, Frank, are up 40, 50%. They're down 85%. They're still down 65%. Believe me, done the research on it. 65% from the 2011 highs, even after this 30, 40% move. They barely moved higher. They're down 80, 90% over the past 6, 7 years. But now if you look at these projects where you're saying, oh, well, it's 1,200. These guys, 1,300. Who's going to come here? It's going to take 15 years for these guys to actually build a mine, which they're not looking to do, junior miners. They're looking to put a stake in the ground, say, hey, this is what we have, a couple of drilling tests, and sell it to a major. Now the majors should be buying tons of these projects, and you're going to see that. You're going to see M&A really pick up. So you want to see the high-grade gold projects, which were dangerous with $1,300 and $1,200 gold prices. They were dangerous to buy because, the margins were so tight. All right, if you 1,150 or 1,200, we're at 1,300. I'm not going, again, it takes 12, 15 years to really develop these mines. Where gold prices are going to be even now, but man, that's kind of risky to just take over. There's so many other better projects that we could take over. Now, tons of projects are worth taking over. Because a lot of these, $1,300 an ounce, if you really have a project that costs $1,400 all-in cost to produce. You should have never bought in the first place. It's probably, but most of these companies who are still around, all our projects under 1,300, we're approaching 1,700 on gold, probably going to 2,000. Again, all these come into play. It's a good sector to make money on, to get a little, again, risk off for everything else. This is a good area to look at. I covered a lot today, a ton. And the point of this podcast, why I didn't bring anybody on, because a lot of this is going to get lost, is to really look at your portfolios, make sure you're protected. If you listen to me, chances are you did pretty good over the past few years. If you didn't listen to me, chances are you did pretty good as long as you're in the S&P 500 or whatever. As long as you didn't, own 100% of your portfolio in freaking gold and stuff, which I'm happy for you. It's coming back. But you missed one of the biggest rallies of all time. Now's the time to be cautious. There's still uncertainty in the market. Be careful here. I told you, if we're wrong, big deal. You're still going to be long a little bit. Just pull some off the table. And if stocks come down, you'll be able to buy them 6 months, a year from now. Again, start making that list. I covered so many names just now. Again, for CVO subscribers, you're going to get my 2 favorite picks to buy right now. Speculative names, fantastic names. You're going to get a 20-page report. It's going to be released after this. After you're probably listening to this, it'll probably hit your email box for your Curzio Venture subscriber. But covered a lot of stuff. Just be careful here. It's not over. It's not slowing. Don't believe the China numbers. It's starting to spread to other countries. The CDC came on TV. I don't know why they came on TV. As I'm doing this, the president's going to speak about it tonight. Why are you speaking about it tonight unless you're worried? But I did read a story that the U.S. has not even been testing people. They haven't been. There's nothing set up for us to test. And no one's going into a hospital and say, hey, I have the coronavirus. They think they have a cough. They think they have something. Again, it's not that they're going to die, but it's definitely more than 53 cases. And I think that's what they're hearing right now, and they're preparing you. So I think, if I had to guess, in the next week or two, you're going to see this more and more U.S. cases pop up. And it's going to scare a lot of people. It's definitely going to scare a lot of people. Because of only 53 people that have it, and the CDC's talking about, the U.S. could have it, and the president speaking today about it. Let's see. But I read 2 different stories, credible, that say that we haven't really tested anybody. We barely tested anybody. We don't know who has it. We don't know who doesn't have it, but there's definitely people here that were in Asia that are unaccounted for. And maybe they do know more than they're leading on. But it just doesn't make sense for the CDC to come out and warn you about something that nobody was really worried about. I mean, if you live in the U.S., you're not really worried about getting coronavirus. It sounds like you should be worried. That's going to push stocks down even further. Again, I'm not calling for a 30% market crash, but a 10, 15% correction could be in the works, and you might see stocks fall 20, 30% within particular industries, especially the ones that have exposure to China. Lower your exposure. Just lower your exposure a little bit. You have to sell every one of your stocks and get completely out of the market. There's going to be some great opportunities, but just be prepared. You guys did very, very well over the past few years. The market's at all-time highs. Protect those gains, because we still have a lot of tailwinds with this market if we pull out the coronavirus, but we have to figure that out, and it's nowhere close to being figured out. And again, when you're looking at China, they account for 40% of the world's economic growth. Last year, it's completely shut off, and we're trading at a huge growth multiple still. So you're probably going to see stocks pull back even further. All right, guys, covered a ton. Hopefully it wasn't too much. You had to listen just to me for a whole hour. Sorry. But hopefully I'm getting through to you. I got a lot of emails. I really appreciate it. I'm glad a lot of you guys took money off the table. Again, that's the first step. Let's keep going here and see what sectors, what stocks we want to buy. And I'll be presenting a lot of that stuff in my newsletters, because everything is this focused coronavirus. And I'm glad that we were able to get in there, early to the party and protect our portfolios. So guys, that's it for me. I'm sure I'm going to have a lot of questions and comments. Email at frankcurzioresearch.com. You can follow me on Twitter. I'm posting a lot about the coronavirus from the sources that I have, which are amazing, amazing sources right now. That's at Frank Curzio. Again, those are free things. And we also have a free report that's on our website, Curzio Research. You can go in there, put your email in, and it is, I believe it's a 17-page report on everything you need to know about the coronavirus. So again, those are free sources. I know a lot of people listen to podcasts are free. And then in our newsletters, we're really telling you guys exactly how to play this, how to position your portfolios, not just on the long side, but also what to get rid of, what to be careful, what's going to come down. So really focus on that. Portfolio management right now, very, very important. And guys, you can get all kinds of access at CurzioResearch.com. So that's it for me. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.